Cryptocurrencies have developed over a short period of time, from digital interests to trillion-dollar technologies that have the ability to change the world's financial system. A growing number of people hold Bitcoin and other cryptocurrencies as investments and use them as money to pay for a variety of products and services, including software and virtual property. Although blockchains are best known for supporting virtual currencies like Bitcoin, many people are now beginning to realize that they have many other uses. For instance, some services use blockchain's immutability to notarize or witness documents, while others use it to grant and transfer licenses for digital art. Blockchains in the financial sector can simplify current infrastructure, speed up post-trade settlement of securities, and lower the cost of payments. They can bring transparency to supply networks. They can support website verifications and secure communication in telecom. Blockchain technology generates a lot of optimism and interest, like many other novel ideas. What exactly does it serve? Blockchains, in brief, may enhance any procedure where individuals must securely access, verify, transfer, or store information. A person's identification, a product's shipping history, or a digital asset like money might all be included in this data. Common databases, spreadsheets, and ledgers are used to store data on things, people, and their interactions. These kinds of systems hold a significant amount of information, from credit card transactions to financial and medical records. These kinds of systems suffer from significant, well-documented flaws as a result of their centralization. A centrally managed record is secretive and open to unauthorized dissemination or access. Additionally, because it is a master copy, it might be permanently deleted or changed. Information is also stored in blockchains. However, there are two key areas in which they diverge. Information is first packaged up and packed in blocks. For instance, the blockchain-based cryptocurrency Bitcoin records all network transactions in a single, freshly generated block that is created every 10 to 15 minutes or so. The next step is to join each block to the one before it to create a chain. Second, this chain of blocks is not kept in a single location. Each block is instead duplicated and dispersed over the whole network. This approach provides a variety of oversights that might be taken advantage of since it lacks the supervision that centralized finance has. The best example of this is FTX, which collapsed in 2022 when it was discovered that it was withdrawing customer cash off the platform. Sam Bankman-Fried and pals were able to utilize the money for other purposes since there was no regulation and no central authority that could confirm that the funds were indeed present. Transparency, authenticity, and peer-to-peer interactions are the pillars on which the blockchain sector as a whole is built. In light of this, centralized exchanges that operate as middlemen and conceal the whereabouts of user cash are the opposite of what the sector ought to be. Even though a few centralized DeFi exchanges have begun to publish evidence of holdings, this is insufficient. The danger is just too high for cryptocurrency investors to bear, as we have seen with FTX. Most projects are already on very shaky ground, especially given the present state of this business and the recent decline in the prices of the top cryptocurrencies from their all-time highs. The crypto community would be shaken and pushed into terrain that could be hard to escape if there were to be another significant incident. Centralized exchanges provide customers with a certain sense of comfort, but the fact that they keep user money in platform owners' wallets on the platform itself is too risky. Investors won't invest if there is no legislation in place to prevent bad actors from doing bad things. On the other side, where the system is decentralized, transparent, and verifiable, we can trust people and organizations because trust is no longer a problem. The network as a whole serves as the foundation for the integrity of the system, each user, and each transaction. Trust has been dispersed and safeguarded, just like information. In order to create a more user-focused system for everyone, several cryptocurrency exchanges are trying to modify the conventional wisdom of employing centralized DeFi exchanges. For instance, the exchange Stormgain just announced the launch of Stormgain DEX. Users of this DEX are given one really straightforward option, which is to never deposit money on the platform. Stormgain DEX has used a different approach to require users to link a wallet and then enter funds into the platform for trading and exchange. A user may invest on the platform without having to send money to a middleman after they link their cold wallet, a wallet over which they alone have ownership and access. The whole sum that the investor wishes to invest in a cryptocurrency leaves the wallet and is done so directly. Users are able to maintain total control over all of their user cash with this strategy. Stormgain eliminates any doubt, so users no longer have to rely on their centralized DeFi platform to honor their funds and spend them appropriately. Exchanges like Stormgain DEX are an excellent illustration of what the cryptocurrency community should aim for if we are to move past our turbulent past. Given that ordinary investments have decreased in value overall across the business over the previous year, the majority of the community is currently scared to make investments. People are reluctant to enter this market since incidents like FTX occur all too often, and might occur again with other controlled exchanges like Coinbase or Binance. Exchanges might build a safer platform to invest on if they adopted Stormgain's model and did the same. The Bitcoin market will resume its positive trend once customers are sure that their money won't be defrauded, stolen from them, or frozen in their accounts. The technology is so promising in so many use cases, from banking and property rights to development and humanitarian help, because of its mix of decentralization, resilience, transparency, and immutability on a trustless protocol. Specialized computer programs, or smart contracts, are run autonomously between a number of parties on some of the more sophisticated blockchain systems, including Ethereum. Developers may now offer services for things like crowdsourcing, censorship-resistant microblogging, and identity management because of the significantly increased capabilities this provides. Beyond these immediate use cases, investment in digital currency firms by angels, venture capitalists, and growth capitalists has reached record highs, spurred by a profusion of opportunities. Over $2.5 billion has reportedly been given to projects and businesses engaged in the blockchain sector, according to CoinDesk. Additionally, universities like MIT, Cornell, and the Imperial College Digital Asset Research Lab are working together more and more on open-source development. This open-source component fosters innovation and is vitally required for security and trust. When it comes to building, modifying, and utilizing blockchain technology, open-source platforms offer more flexibility and freedom. The entire worth of a particular effort rises in direct proportion to its capacity to grow beyond the local or even national context. Governments and central banks are also eager to understand the blockchain ecosystem and take part in it. The joint efforts of the public, corporate, and academic sectors are laying the groundwork for strong new public-private partnerships that combine political clout, third sector ambition, and business acumen with the required financial resources and technological know-how. Decentralized exchanges have now experienced firsthand how devastating it can be to deviate from their guiding principles. Both community members and exchange boards are seeking methods to break free from centralized exchange procedures in the wake of FTX. They let consumers maintain total control over their funds by providing a mechanism for them to never really deposit money on the site. That was all about the video. You are also welcome to share your views about the discussion. Soon, there will be another video for you. Until then, like the video and subscribe to CryptoWave.